Ladies and gentlemen, thank you for attending this webinar on behalf of the Northwest University. It's nice to have you here, and we have a fascinating theme today. Within agriculture, that's the sector that we're dealing with, but I tell you, there are so many things that we can talk about this afternoon, especially when we have a look at the year 2021, and do we need a good year? So we're going to reflect a little bit on what happened in 2020, but our main focus is on what to expect in 2021. How can we get ready, and what should we be ready for? I'm joined today by three experts in the field, and you'll hear they differ somewhat in terms of their focus, but they're all experts within the field of agriculture. We're going to start off with, or at least let me quickly introduce the three of them. We're going to start off with Nico Groenewald. He's head of agribusiness from Standard Bank. And we're going to talk to him. It's wonderful to have someone from the agri-financial environment here. And we're going to listen to what he has to say from that perspective. We're also fortunate to have someone very keen on red meat, especially with the festive season coming up. We have the CEO of the SA FEEDLOT Association by name of Dewald Olivier. So we have him here in the webinar as well. And then, of course, from the Northwest University, Dr. Johnny van der Merwe. He is here with me this afternoon, Johnny. Johnny is, of course, in agriculture, more specifically so in agricultural economics. He's a senior lecturer in the Faculty of Economic and Management Sciences at the Northwest University. But he is also the managing director of AMT, focusing on agri-market trends, and I know from experience that they are up to date almost on a daily basis. I think, Johnny, you keep track of what's happening in the market. All right, so let's get started. Gentlemen, we're going to talk casually and conversationally, but I'd like to just start off with a bit of a bird's eye view on where we are at the moment in terms of the agricultural sector when it comes to the economy, financing, and so on. I'm really looking forward to hear from you, Nico, on what you from Standard Bank side are doing and what you are seeing. We spoke a little bit earlier about what we're seeing in terms of interest rates, inflation, how difficult it is to move into the market, and so on. So, Nico, from your side, what would you say when I ask you, where are we at the moment? What are we experiencing in the market?
Thanks a lot. I think a best way to describe it is, when you're playing for the World Cup finals, but you're not playing in the finals, you're actually playing for third or fourth position. It's great to be there, but it's the wrong game to play. And I guess to a certain extent, that's what happened with agriculture this year, in the sense that we had two very difficult years from a growth perspective in agriculture prior to this year. And in this year, we rebounded back to great growth for the first two quarters. And it's the likelihood of agriculture for this year ending at a double-figure growth is material. Now, why do I say that? That's then, playing for the third spot, so to speak. I guess the rest of the economy is really taking a pounding, and there's different numbers that's being beaten around. But our estimate is that the economy as a whole will be shrinking by something around 8%. So in a very difficult year, the economy is taking a hiding, and agriculture is the only shining light in this difficult time. It would have been great if we would be able to grow at these kind of rates, alongside with the economy that is growing, because that would just add additional the demand side of agriculture. So all in all, I think from a pure agricultural economic perspective, I think it was 2020 was a good year. Agriculture was not affected to the same extent than other industries. From a COVID perspective, agriculture was open. We did have some challenges in terms of the supply chains, but that got sorted out, and there are certain sub-industries that were slightly affected more than others, but in general, we had a good year. Just looking at summer grains, I mean, we're going to have the second biggest crop this year that we ever had in history. So all those things played a significant role to put agriculture back on the map. It would have been great if we could sync that with a general growth in the economy as such.
But Nico, this is a bit of a challenge, because what does that mean for the future? Now we have wonderful growth, a great season within a struggling economy. If you were to give advice, what would you say? Now, are you going to sit and bank on the progress? Is it now a good time to expand and look for new markets? What should someone in farming do now with this great season?
Well, I think every cloud has a silver lining, and specifically for agriculture, it was important to get our base back to where it should have been after that 2 years that we were struggling. It's important to get your base right, and I think in this year, despite COVID and despite the difficult economic conditions in the broader economy, I think agriculture did manage to work back to a better base, and that's critically important. One thing that one need to remember is that we in the business of providing food and textile and clothing, and those are essential products. So if you focus on the right stuff for the market that you're in, then there's definitely ample opportunity going forward. It in all likelihood, just to jump back to what we've seen from a climatic perspective, it seems like this year, all indications are, and all the experts say that we are going into a La Nina year, which would mean generally wetter conditions or the possibility of a better agricultural year. So again, if we got our base right, which we now did for 2020, and if we can build on that momentum in the 2021 year, then definitely agriculture would be the area where there would be opportunities going forward.
Oh, that's encouraging, Nico. Thank you. Johnny, he's mentioned that we've seen a record year, second best in history, Nico mentioned. Have you seen this in the markets? Have you seen a reflection of that play out somewhere?
Yes, Skipper, I think a big role player in this is, of course, the maize market. And I think the maize industry did really well in terms of production. And I think that's a big factor that drives the agricultural economy, basically, if I can say it like that. And so that was a very good year. We're hopefully heading into a very big production season again. I know the expectation for planting is for the summer crop season with these extremely high prices are very good. So hopefully we're heading into another year that agriculture can contribute significantly to the whole economy, of course, again. As Nico mentioned, of course, when we look back to 2020, of course, I think the biggest surprise factor was, of course, the demand factor. We had significant shift in demand. The lockdown had a significant shift in demand. So there was a real move back to basics, back to food products. The other parts of the economy were closed, of course, and we had a real shift in demand, and of course that supported our prices, coupled with the exchange rate, the interest rates that dropped, and all those factors contributed to a significant shift in demand to food and higher prices, of course, especially for red meat, with significantly high prices. I think record prices the past year.
Well, Dewald, we're going to come to you in a moment, but it's a paradox, isn't it? We're sitting in COVID, and so many businesses are struggling. Yet in this agricultural context, with its focus on being an essential service, they've seen growth. It's weird.
That was so interesting. I think in February or since the lockdown in March, when the lockdown started, everybody that we're going to have this significant pressure on consumers. We're going to have lower demand, of course, for food products. Prices are going to come under pressure. And I think we saw precisely the opposite. We saw this significant shift in demand. People didn't have any expenses or cost on fuel and etc.
Yeah.
On a
They
lot
went
of other
nowhere.
stuff.
They just stayed at home and,
Yes,
and ate.
Precisely, and I think that created a very interesting dynamic in the market. But I'm just a bit afraid of the lag effect of the COVID, and hopefully Nico and Dewald can expand on that for 2021. The consumers, for especially for red meat, is your higher income consumers, and we actually saw them being better off during this COVID period, because we had this drop in interest rates. They didn't really were affected with their jobs and so forth, and they could spend more on the red meat, on mutton and beef and so forth, and so we saw these prices actually increasing. But if we're heading to 2021, the question is what's going to happen to inflation and of course then interest rates. Is the consumer, especially a higher end consumer, are they going to be significantly affected at the lag effect of this COVID-19, and how is that going to affect their demand and of course food prices, specifically for beef and mutton? If we're looking, I know maize is more a staple food, but how is it going to affect the demand for food going into 2021? And I know Nico mentioned earlier something about we're heading possibly into slightly higher interest rates again, inflation that can creep up a bit. And I think our saving grace in terms of inflation was, I think, low fuel spend, but the oil price that went significantly down. So we had those costs that were kept into check a bit. But if this ship is going to turn now, where basically are we headed? Are we heading to a higher inflation, higher interest rates and so forth? And on the other side, we have to keep this economic machine going, and we have to do that with spending, consumer spending.
So Nico, I'm going to come to you in a moment with that lag effect, or do you want to jump in here?
Yeah, no, I just wanted to mention, I think what we must also not underestimate, and this is specifically with reference to our export-orientated industries, is that COVID has just emphasized healthy eating and consumption habits that has changed, and I think that in itself is driving a different market across the globe. So if you just look at what happened, for instance, to the consumption of citrus products, and it's in all likelihood that that momentum in terms of the use of those kind of products across the globe is likely to continue, which would benefit our export-orientated industries. Yes, that might not be, if you look at the South African consumer, and we often tend to look at the South African consumer and then think, work that back as to what would that do from an agricultural supply perspective if the demand is changing. And it is so in the South African environment. I think something like 17 million people are dependent on grants in some shape or form, and that is not ideal, and it has certain impact on how people spend money on food. And you mentioned earlier the more expensive proteins such as mutton and even beef to a lesser extent is probably out of reach for consumers at that side of the market. But having said that, that again created something else, and Johnny alluded to it as to what happened, to a shift back to grains, for instance. But where I sit, when what we see is our export-orientated industries have done exceptionally well during this period, and we're of the opinion, if I look how those specific producers are preparing themselves for increased production in the next year, that is likely to continue.
I continue to be astounded by the contrast. I mean, in a time where we've seen very little international travel, now exports are doing well. It's still for me a bit of a paradox. But Dewald, you must be chomping at the bit. We're talking about red meat, mutton, beef, and I read somewhere that feedlots are operating at a loss. So there must be an interesting perspective coming from the feedlots.
Well, I see Nico smile. Let me tell you, obviously, everybody is always operating at a loss. Yeah. I want to share your sentiment in the fact that you made the remark here, Peter, to say that this is a paradox. I think I can tell you two things. When the lockdown started in March, the South African red meat industry actually had the best figures for March they've ever had, when there was that panic buying. So people actually stocked up. It was just immense. However, April was the worst April that we've ever seen. After that, it planed out a little bit. But what we need to remember with regards to red meat per se, I think a lot of times we think of red meat and we think December coming up. We slaughter approximately 2.6 million head of cattle per annum. And within that 12-month period, November and December, we normally slaughter almost double the figures. Okay. These slaughters or slaughterings that are up almost double, it's from 110 up to 180, 190,000 cattle being slaughtered. The biggest portion of that are not made up by you and me and the higher LSM groups buying more meat, because we buy as often as we normally buy, maybe a day or two more in the holidays, but not as more frequent as usually. What happened is the blue collar workers, the guys that normally gets a 13th check, those guys, they buy a half a carcass and a bucket full of Zamalak or Black Label, and they go on holiday. Well, they stay at home and they consume that, and that's where the numbers are made up. And I think from our industry on the national consumption, we are very wary of what's going to happen, because we understand that that level of consumer is not going to have a 13th check this year. He has used it within COVID. So that is one of a very huge concern to us. I can actually latch on to what Nico said in exporting. I think we recently, in the past few years, became a net exporter of red meat, and that helped us tremendously. I think if the red meat industry was a net importer, we would have looked totally different. And the exports that we could drive assisted us a lot, even though the hotels and the bed and breakfasts and the restaurants were also closed in the rest of the world. I think we can safely say that China makes a huge difference in export of red meat to them, because they take whatever they can and they take it out of the country. What is also important, which I should mention with regards to a carcass, because that people sometimes think that we export rump steaks and fillet steaks and that to China and all whole carcasses. Now, that doesn't work like that. The Chinese market looks for meat on bone. Now, that means that's the rib portions or all portions close to bone, which means that the higher value cuts, like I mentioned, the rump, the fillet, and all those cuts needs to be sold to another consumer or another place, which means at this stage, it stays locally. So we can export more to China. China is not necessarily the answer, but where are the rest of the cuts going? It stays here, and we need to move that out. So if we look at what's happening currently with regards to our prices and the like, we are very concerned what's going to happen over December and January for that matter. Are the demand going to be there for or enough to buy the higher value cuts? We know that throughout COVID, or at some stage in COVID when it was winter, the rump steaks didn't sell as they would like, and they actually started to use rump steaks to make biltong. So luckily, red meat is it's possible to convert it to something else. We've also seen that mincemeat is actually selling very, very good, for the simple reason it's versatile. You can use mince in many ways. So yes, I think agriculture in total did very good. However, from our perspective, from feedlot perspective, obviously you mentioned that we've got the biggest grain harvest in many years. logic tells you that the price of grain actually should have plummeted. It should have went down totally, but it didn't. And whatever the factors might be, if it's the forex, the exchange rate, or whatever, it stayed very high. And during this period of COVID, in the whole red meat side, we as feedlots actually came to a place where we said the price of chop, which we feed our animals, is actually still very high because it's linked to maize. And that had the effect, and I think it's still the case at this stage, because of the lower slaughter price, that we are feeding at a loss. Why it will continue is because we work in 4-month cycles. So it's not when you bought a winner calf today or buy it today, you will only see the effect of buying and selling in 4 months' time. So you can only see in 4 months' time whether or not you make a profit or a loss. However, day to day, and every day you feed an animal, there's either an upside or a downside to what's happening. And I think that's what currently happening. Currently, there's so many issues here.
Devo, just out of interest, from an export perspective, you mentioned China. Do you think that and I've seen some projections in terms of what BFAP is doing as well as AGBIS insofar as meat exports, but that's a a holistic number. Specifically from a beef export perspective, is there specific drives to build on that and to expand that, or is that more a as it happens we see if we can meet the demand for that? Or how does the Feedlot Association approach it?
Nico, currently we're exporting approximately 4% of meat, of our product, let's say of our product. I think the projections BFAP is making that we can up to 2028 export approximately 20%, which would be brilliant. From an export perception or viewpoint, we are of the opinion that we will not add more red meat consumers locally. I think we are saturated. We've reached our saturation point with regards to meat consumption in South Africa. So the only way that we can grow this is if we export. Like they say in Afrikaans, it's not a moggetroffe. It's not anything can happen when it happens. I think there's a definite drive at this stage to get more abattoirs registered to export. Obviously, the low-hanging fruit at this stage is China. If we can export more to China, that will help a lot. But you still need the Middle Eastern markets to export the higher value cuts. You still need the Saudi Arabia and those guys who do not have any cattle, who will take our higher value cuts. And we need to export to them. So we need to grow 2 markets, specifically the Chinese market where there's meat on bone, and then the other market for the higher value cuts. But there's a definite drive for that. It's not if it happens, it's good. I think the focus is totally shifted. Now, with that in mind, obviously, there's a lot of things that needs to happen, and traceability is one of them. Our herd health is very, very important because that's our selling proposition. That's what we use to sell our product, to say that we are traceable. And that's one of the biggest things why we could have exported to China, because we've got traceability. Although it's from the feedlot gate, but that's what China still accept our meat, even though we do not have our OIE, the Animal Health Organization status with regards to FMD free back. Because we've got a bilateral agreement with China, and they're happy with the declarations that we made with regards to where the animals come from. A definite drive for export. That is the way to go. That's how we have to do it.
So, Dewald, you speak of the Eastern and Middle Eastern market. What about Africa? Is there a future in Africa, a market that we can look forward to in the future when it comes to Africa?
Yes, I agree with the African Continental Free Trade Agreement. I think there's a few issues or a few plays that will come in for us that will open. I think the African free trade of the African Continental Free Trade Agreement will open up, but it's still Africa. Now, cattle in Africa is like Europe sees maybe property. I mean, we know that it's very important to them, so it's difficult to access those markets. My personal opinion is we can access those markets, but it need to be through retailers. I know that Shoprite Checkers has opened a store in Kenya. Obviously, everything was halted now with COVID, but just prior to that, they bought a supermarket chain in Kenya. And the agreement was that they will export South African red meat to Kenya specifically to stock their retail shops with. If we can do that, that'll be brilliant. But what we've seen, the flip side, is that countries, for example, Nigeria and Ghana, has contacted the Feedlot Association to say, please assist us in putting up our own feedlots. Please help us to see how we can do feedlotting in our specific countries. Now, there's one problem with them. The biggest problem is they've got the government involved, which is always an issue if you do a project or take on a project like this. But yes, I think Africa is a possibility, but it's a slower possibility for the simple reason that it's not in dollar, not necessarily, and it's African business, which means you get paid when you get paid. Whereas the Middle Eastern countries, China and so on, there's a little bit more stability. However, touch wood, China is China. I mean, you cannot litigate in China. So what happens normally in the Chinese market is they would mid-sea just stop a consignment of red meat going, or just when it lands on that site say, listen, we're going to place it on hold. We're not going to take it now. Let's renegotiate the price. So China has got its own problems as well.
Dewald, if I can quickly jump in here. I know we're looking into more export-orientated markets, of course, in terms of red meat, and I'm looking at prices every week, of course, and I saw there's some international factors that's coming into play at the moment as well. And if you're talking about 20% of our herd, that's probably going to be exported within the next 10 or 20 years. Have you seen the seasonality or the significant price changes? Because we're going to be basically exposed to our exchange rate, our very volatile exchange rate, as we have seen in the maize industry. And it's so unpredictable, and it's creating a lot of unpredictability for our maize production as well. And for instance, as you mentioned, last year this year we saw a very big maize production, but we saw high prices as well, and that wasn't necessarily due to our local production conditions. Are we headed into that direction? Are we headed into more volatile prices? And I know seasonality, you usually see a normal trend looking into local production and consumption, of course. Will we see more volatility going into the future for livestock prices?
Yeah, I think we definitely will. But we must remember that this is not an event, this is a process. It's going to take time. Now, what we want to achieve is, I think, we've got approximately 13 million heads of cattle in South Africa, and that's a thumbsuck at this stage, because we do not know exactly. And also, according to a thumbsuck, we've got 41% are in the hands of the emerging farmers. If we can broaden and build on that basis of the emerging farmers, we can actually create some stability. Because what do we want? We would like to have the local market being fulfilled with the newcomers within the specific industry. And obviously, the bigger abattoirs where the capital has already been invested to export, because they're already set up to do that. Again, one step back, it's a process, it's not an event. What we also need to remember is, when we play with meat in the international market, we compete with international players, and it's also seasonal. It's not only seasonal in South Africa, but I mean, we sit with Brazil, who has had floods, and obviously their maize and their corn is almost wiped out. They've had a really big problem with regards to raising their calves, and they couldn't deliver. They have had unrest between their primary producers and their feedlots, so to speak. They don't really have feedlots, but let's say the abattoirs or the packers. So it creates opportunities for us, because they're also in a herd rebuilding phase where they are, and it's seasonal internationally. So once we enter the international arena on a bigger scale, we're going to have a more international seasonal cycle, which we tend to, and there will be those players who play there, obviously, and the other guy stays local. So personally, I think there'll be two sets of value chains running, an international player and the other is a local player serving the local market.
Dewald, I want to stay with you for a moment, but then I'd like to pose this question to both you and Niku. And whilst I'm doing so, let me interrupt myself by saying, those of you watching the webinar, you're more than welcome to post questions. We see them live and we'd like to answer your questions. So just type in the little text box and it'll come through. All right, so we've had a question that basically asks, how do we access these Chinese and these Middle Eastern markets? How do you start? So I think, you know, for Dewald, who is some exposure in this, Dewald, I'd like to give you the opportunity first, but then Niku, from an agribusiness perspective, how do you diversify and open up markets and enter into these new markets? So Dewald first, please.
Obviously, what they buy from us is an experience. I think the international consumer and the buyers internationally is exactly like our local consumers. Obviously, they are just bigger entities, but they want to buy an experience. And the question is, what experience do we give them with regards to the product that we sell? What we sometimes tend to forget is that the animals or the product that we sell is we slaughter very young. So we're actually touching on veal, the product that we sell, which has in itself its own composition and its own attributes we can use. So how do we access these markets? How do we open them? Obviously, we go to a specific market. Now, physically, how it works, we go to, let's use Dubai or Saudi or whatever, and we go to them and we ask them, or they contact us with regards to a product, and then they've got a certain rule, a certain set of, it's almost a tick box, which they want us to comply with. And according to that, then they come back to South Africa, they speak to our animal health department, and we either comply or we need to negotiate on these issues that we do not comply with, and how do we send it out. It's actually the drive behind this, and you must remember that it's the abattoir that exports. It's not the feedlot that exports, it's an abattoir. Why? Because the hygiene and the registration is on an abattoir level. What is inevitably the truth in South Africa is that the biggest abattoirs in South Africa is actually feedlots. So they are vertically integrated into the value chain, and they actually own the abattoir at the end of the day. Which makes it, in our specific case, actually the feedlots that export, and it's the feedlot brand that are exporting, for example, Karen beef or Sparta beef or Cernic or Beefmaster for that matter. It's the feedlot brand that exports. So it is not that easy. It isn't that easy. It isn't like you just walk into Europe, for example, and you say, I would like to put a steak on Tesco's cover, what do you call it, desk. You need to negotiate it. Now, for example, if you use Europe, and that's my final, Europe has got two things. Export to Europe, we call it a veterinary practice notice. It's a VPN. They've got two things they say. We want traceability, and we want you to show us, obviously, that you don't feed growth stimulants. If we can show them those two, we can export to Europe. Obviously, we don't have traceability, full traceability from 6 months, and therefore we cannot show what we give our animals. Not that we give them anything wrong, but what we can't show or give. So from that sense, it's easy. But to get to the market, that's a full-time job. It's difficult to open up markets because you've got world-class competitors like Australia, Brazil, the US, etc.
Dewald, I'd like us to stay on this international theme now, and Niku, I'm coming to you soon. But just a reminder, Dewald, I would like to hear more about traceability. We've had a question here about traceability between the feedlot and the farm, but we are still in this international arena and breaking into the international market. Niku, what's your take on it?
Okay, I think Dewald touched on it. What is important is that you have a functional arrangement and a willingness between the industry as well as government, because of the regulations that need to be adhered to. It is important that industry and government is on the same page in terms of what we want to achieve. And if you don't have that, then it's difficult to establish in the industries where there are not protocols in place to actually establish the protocol. Therefore, it's critically important that you have government on board in this process of trying to find new markets. What then also can happen is, and I'm going to use Standard Bank as an example, 20% of Standard Bank is owned by the Chinese. So we've got a strong link into China in terms of our shareholding. Because of that, we then interact at industry level. And we have been, for the past 3 years, we've been involved in the Chinese International Export Expose, which they have specifically, where they import expose, where they specifically look for markets across the globe where they can import product from. I think from where we as a bank sit, it is an easy opportunity for us to facilitate that kind of trade arrangements.
All right, thank you, Nico. Johnny, from your side, we're talking about the global environment, the global market. We've seen the USA, a major role player in the world today. They've had their elections. Some people claim to have won. Some people refuse to admit loss. But I mean, they'll have a president in January. We expect it to be Biden. How is that going to affect us?
I think if you look into the markets and a lot of the volatility, especially if we're looking into the grain markets, that's basically a global market and it's got a direct impact on our local prices as well. So I think that the relationship between China and the USA, two of the biggest economies in the world, that created a lot of volatility, and Trump created a lot of that volatility. And I think, not necessarily Trump, I think the relationship between America and China creates a lot of that volatility in terms of trade agreements and so forth. And the Biden factor that's coming into play now, a lot of experts saying that Biden is more, let's say, globally orientated than Trump. Trump is more for America, if you can say it like that. And I think to a certain extent that can benefit prices. That can benefit your commodity prices. Trade flow can be increased. China can actually have a better relationship with the USA at the moment, and hopefully that can create a better flow of markets overall, and hopefully flow back and benefit our local producers in terms of the exports. And I think Nico and Dewald mentioned that the importance of the market. Dewald mentioned that only 4% of our meat is going out at the moment, and you might think that is an insignificant amount of the product that's going out for an entire industry. But we saw, as soon as Food and Mouth broke out, the importance that only that, I think it was 2% at that time, but that percentage, the importance that had on our local prices. And I think our local markets are sentiment driven, if you can call it like, if you can say it like that. We are looking forward to where these markets are going, and a lot of people reinvest in agriculture in terms of where they think things are going, and sentiment is a big factor, and that's why policies and policies that's creating uncertainty in the agricultural industry is so damaging, basically, to our local production. And I think with these farmers and a lot of stuff and new farmers that's struggling to get into the industry, that's creating a whole generational gap at the moment. And we're gonna hopefully not gonna see that going forward, but we need the young farmers to come into the market again and play their role, create new energy, come into the market and create these new opportunities in the agricultural industry.
Nico, I'm going to ask you about the young farmers coming into the business just now. but on America. I mean, I think the inauguration is on the 20th of January. So I know it's difficult to predict and it's difficult to set dates, but by what time will we see a change here? Are we expecting it middle of 2021? Do you think the Biden administration will take a full year to get the relationships with China back to what we knew it before the Trump era?
That's really difficult, as we saw this year, and I think it's unbelievably uncertain going into 2021. I think the biggest factor that we need to, I think that will determine our local markets is the dollar. Will the dollar weaken or strengthen? And I don't think we saw the rand strengthening at the last month or so, and it was actually the dollar weakening. It's not really the rand that was strengthening, and it was because of this uncertainty. Investors wanted to get away from these currencies and invest more into gold and oil and so forth. But I think the Biden election, if this can create some certainty, we can see at least the dollar starting to stabilize. I'm not sure in which direction, but we can see at least it's stabilizing and the market's finding its feet again. I know I talked to Nico specifically beforehand, and what Standard Bank's view is specifically on the dollar going forward into 2021. Nico, I don't know if you want to jump in here.
Thanks, Johnny. Yeah, I mentioned to him, I mean, our economics department look at these numbers, and they predict a slight strengthening of the rand. But again, you need to see that in the short-term period of coming out of the COVID year, going into a change in terms of new government coming into play in America. I think if you look at the longer-term view, the rand, as Johnny has quite rightly mentioned, our view is it's more a dollar weakness in the short term. But in the longer term, I think that the rand is a currency that will deteriorate against the dollar. So, but again, that's not per se the issue, because the issue is the volatility in between these. You know, if you follow that trend over time, you're going to see it move in a specific direction. But to Dewald's point, in the meat industry, they basically, you know, have a cycle of 120 days in a feedlot. If that cycle is not aligned with what happens in that volatile environment where the currency goes up and down, you know, that can potentially impact your profitability levels at that point in time. But in general, yes, we see for 2021 a slightly stronger rand, more as at the back of a weaker dollar, but then that trend would go into a weaker rand over time.
And Nico, what do you expect the effect of inflation to be on this?
I think at the moment, inflation yes, Dewald.
No, I just want to come in there and say one thing. I think when I speak specifically to the feedlots, and there's many questions, what do we do? I think one of the biggest things is stay calm. Paddle underwater like hell, but stay calm. Just stay afloat. Don't make sudden moves. There's so many factors which we don't know what's going to happen. I mean, Johnny, you speaking with regards to the American election. We speak about it could. I think there's just so many unknowns at this stage, which was created by COVID. We can take a wild guess and a stab in the dark, but whereas in previous years we had one or two unknowns, it's almost as if everything is an unknown now. And my advice to many of the guys is just do not, unless you see an opportunity which is a quick and a good bank on money, do not jump out and do something way out. You might regret it, but obviously these guys are all entrepreneurs, so they're looking for opportunities. But my advice would normally be just keep it calm, just relax a little bit.
No, when it comes to the US election, they're very critical on the first 100 days, and perhaps we'll have to just wait and see what happens in the 100 days. Nico, the inflation issue, is it an issue?
If you look at all the analysts, I don't think that inflation is going to move out significantly. Our predictions in any event is that there's not a significant move. It's a slight move upwards, but it's going to stay in at levels well within the Reserve Bank's parameters. And I guess it's at the back of growth, which is still sluggish. We are seeing a contraction this year, as I mentioned earlier, of 8%. And to recover from that in going into next year, and there's different views on it. I think Standard Bank's house view is that we would grow at a rate of about 4%, but you need to understand that is at the back of a contraction of this year. So if you just smooth that line out, it's not that you would be growing at those numbers, and then we would go back to lower numbers again. And at the back of that growth, there's not significant inflation pressures.
Okay, thank you, Nico. I'm going to come back to you on the energy and that we spoke of with the young farmers and also the effect of emerging farms. But first, we've had a question on traceability, Dewald, specifically from farmer to feedlot. The question specifically asks, what can we do to increase traceability?
Actually, prior to this, I had a meeting with government. We had a liaison meeting with government. And at each and every meeting, I actually say the following. Traceability belongs to everyone and is the responsibility of everyone. So many times we're looking at government, or we're looking at and specifically in the red meat chain to say that, but what is the feedlots doing, or what is the abattoirs doing, or what is the farmers doing? And I think it starts with myself. As soon as I start tagging my animals, I can sell a better product because I've got proof. I actually enhance the product I'm selling. So the best way, personally, how I see we fulfilling this whole traceability requirement is when farmers at the age of 6 months, when they get their first brucellosis shot, then you tag the animal. And that's the start of it. And from there, you keep record and you sell a better animal, you sell a better product to the feedlot or to the abattoir. All depends on what you're doing. But that's the way to go. We've got many plans, and we've got processes in place to say that we're going to do a better traceability system in South Africa. But it's like stopping at your stop street when you go home. Everybody needs to adhere to the law. Not that this is law yet, but I think what we should do is we should start taking our own animals. And once we start there, I think we'll see a change.
So I assume from the Feedlot Association, this is a campaign that you're running and a focus from your side.
Okay, so there's a big drive. What we're currently doing is, and some of the feedlots, the bigger feedlots specifically, has jumped on this to say the following. If you tag your animals, and if you do X, Y, Z, there are 4 or 5 things which needs to be administered by a vet, then the feedlot will actually pay for that service. The ear tags to be put into the animal, the inoculations to be done, the injections, etc., etc. The feedlot, once it buys the animal from you, it will actually give you back the money that you have paid to get that done. Obviously, you cannot bind the farmer in to say that you have to sell to me. So the farmer has got the opportunity to sell that, let's say, calf to any feedlot or sell it at any auction. But once you sell it to a specific feedlot who has an agreement with you, then he will buy it back at obviously the market rate at that stage, but he will pay for whatever costs you had, which is negotiated upfront with the vet. So that's I think. Again, that's the only way we can do this if it's a pull action. To try and push it from a farm side is not going to work. It needs to be pulled in the economics in a business sense. It needs to be pulled in, then it will work. There needs to be a value added specifically if your animals are tagged. And the value at this stage is you deliver a better product. If you deliver a better product with traceability, we can export it. If we export it, there will be money involved, which will be seen go down the value chain back to the primary producer. The Australians say the cow-calf operator, and I like that the best, the cow-calf operator.
Okay, thanks, Dewald. We got you. All right, Johnny, you've mentioned we're looking for some energy, some positive energy coming from young farmers. And I mean, even from the Northwest University, we've seen agriculture doing well. A lot of things happening within the sector. We have an honors degree in agriculture economics running from next year, and a more and more focus, even from a postgraduate level, on studies into agricultural economics. So I think there's a lot happening and a lot of opportunity for growth. But you mentioned that we're looking for that energy from young farmers.
I think if you have a new the sun coming into the business or the farm, you see there's new opportunities and there's new questions that's being asked. I always tell my students, just ask questions. Just try and ask the right questions. You won't always have the answers at the start, but when you start in an industry, but just start to ask questions why it was done in a certain way, and try to incorporate technology into the systems. And I think we have a significant shift in the way animals are marketed. Grain is marketed at the moment. We see these online markets that's coming into play now. I think the COVID and the lockdown, it basically jump-started this online markets and the whole, I think, sphere of the agricultural industry to change much more significantly and rapidly than would have been done. I think you can sit at a normal auction, livestock auction now, and there's people bidding online with the people that's being there. And you mentioned you want to see people face to face sometimes, but there's this move to efficiency, and it's much more efficient. Like this webinar now. Just quickly sign in and get some information and go back to your normal day-to-day workings. But I think we must not forget the personal touch on the whole thing. But I think new energy into these markets and a new way of thinking is crucial. And I think, and I liked what Dewald was saying in terms of the export. We need to get this traceability done. We need to make our agricultural market unique in the global market, because we are competing globally. And that is basically the whole essence of it. We're competing in a global market, a very efficient global market, and with, I think, not the assistance that other markets is getting. So we need to be more productive. We need to be more committed, get more energy into the market, and I like the way Dewald is talking about getting the exports, getting these markets going. And I want actually, if I may, quickly redirect this to Dewald and Nico as well, in terms of these online markets and what you have seen, how this changed within 2020, and are you seeing this trend continuing going forward? And what's the impact going to be on markets?
I think, Nico, I'd like to jump to you first. Let's see what we hear from you. I think, we're speaking of the positive energy coming from young farmers, even emerging farmers, and they all need financial institutions such as Standard Bank behind them. What's your take on that? And then if you please move into what you expect, as John has mentioned.
Yeah, I think just a side comment. Coincidentally, I read something. I think it's Successful Farming is an online platform in America, and they did a survey earlier this year amongst their constituency, and America also sits with a similar problem in terms of aging farmers. So I think it's a global phenomenon that the level of entry on young farmers is not necessarily where one would like to see it. Having said that, though, I don't think that's the only place of entry for young people into agriculture, that you need to enter as a farmer into the agricultural value chain. There's other areas that obviously can be the platform from where you can move into a producer level. Then insofar as technology is concerned and online platforms, if you just go and have a look at the app advertisements, and specifically in Dewald's environment, in the livestock environment, you would see how many auctions currently from our commercial producers already has a electronic platform attached to it. It's most of these large auctions, which traditionally we saw in, for instance, in the game industry, there was a live activity in terms of online bidders taking place. These days, cattle auctions, people doing their production auctions, the ability to do that electronically is also available, and I think that is going to continue. From a bank perspective, we are also looking at these platforms. We've seen the rise of some of these bringing where platforms bring buyers and sellers together, not just in the livestock environment, but also in the fresh market environment, and that is increasing. We ourselves are looking at some of those developments across the African continent, because in the dynamics in the rest of Africa is slightly different than South Africa, insofar as there's a lot more small-scale farmers that's involved, and the logistics to get buyers and sellers together there necessitates that you need to find a better platform to effectively move those products. I do foresee that is going to increase in the South African context as well.
Thank you, Nico. Dewald, from your side?
Yeah, I agree 100%. The online auctions actually did very well. There's a few things we need to the biosecurity rules for livestock agents, actually, it was gazetted last week, Friday, the 13th, on the 13th, okay. And what the biosecurity rules actually, it encompasses or pulled everything together, traceability, this whole platform thing, and the responsibility of the value chain to take responsibility of the biosecurity of the product sold, or the animals, or whatever you want to call it. And that is what it's all about. I think when they started with the online auctions, the whole thing about this was to say that we take responsibility for what we're having. We see the risk in bringing animals of specific different locations together, put them in the same pen, and then sell them to one seller, or take them to one farm or one feedlot after that. That in itself is a risk. And obviously, this whole COVID thing just exposed or exacerbated it. And we know it because we know how to deal with FMD. Actually, they could have just come to us, the whole world, and ask us, how do we deal with FMD? Because we've been dealing it the whole time. And that's actually the same. It's biosecurity. But online platforms is definitely here to stay. I think the feedlots are many of them are happy with it. All I can say is, I think personally, we're not in the cattle business. We're not in the meat business. We are in the people business. And you do business with people. So relationship is actually the key to all of this. And personally, I think more and more it will be done electronically, but it will be done on a personal basis with regards to who do I know, who do I buy from, who am I secure, and who do I understand what animals are coming to my farm. Relationship is going to become key, and we've seen it. Feedlots specifically currently buying from specific farmers. In this whole time where we've got FMD as well, because they know and they trust the farmer where they get the animals from, and they moved away from buying on an open platform or open stages, and they're trying to target specific farmers. And I will encourage each and every farmer to say, approach a feedlot, start a relationship, and market your product, because you've got a unique product. Use your unique selling proposition and give it and down the line to the feedlot. And I can promise you, a relationship will be there. And at the end of the day, you will bear the fruits of whatever you put into your animals.
Dewald, I like what you said, and I always try to tell my students that as well in class. To say you can have certain skills, you can be the best producer you can have, but if you don't have that personal touch, that human skill, the soft skills, going into any business, if you're going into the banking sector, if you're going to a producer, or the feedlot industry, you need to have that personal touch, of course. You need to have that soft skills, being able to negotiate better prices, being able to have that relationship. And I think the agricultural industry it's driven by relationships. It's still that handshake type of industry. And I'm so glad you mentioned that as well. And yeah, I think you just need to stay on top of your relationships. You can be a big commercial or a small farmer. You just need to have that relationships going in, and I think that's a crucial factor for growing your business going forward.
Gentlemen, we have 1 minute to say goodbye. Dewald, I'm coming to you first. There's been a question here on blockchain technology in traceability. Is it helping? Is it an option? So I want a quick answer from you on that before we say goodbye.
I think blockchain is just another system. What we currently know indeed is a system. We need a culture change with regards to tag your animals. The system will come. I'm not shooting down blockchain. It will come. But now we need to do a culture change. We need to start tagging our animals. And it has got nothing to do with the system at this stage.
Thank you, Dewald, and thank you for participating. I promise you I'll do my very best and braai as many chops as possible during the month of December. Thank you for joining us this afternoon. And then also Niku. Niku, good luck with your, I hear that you're entering into canoeing as a hobby. So good luck with that. Thank you for taking the time off, and thank Standard Bank as well for allowing you to be part of this.
Thank you very much. Yeah, I'm not so sure of your sources, but in terms of the canoeing, but thank you very much for that.
And then Dr. Johnny, it's you know, when you have an expert to listen to and they impress you every time you have a conversation, it's a wonderful feeling. So thank you so much for sharing your expertise.
Must be probably talking about Dewald and Nico then. Yeah, but always a pleasure, and yeah, hopefully we can just give a little bit of information to producers to make more informed decisions, and that's our whole mission. And we're doing that weekly overviews with Standard Bank, of course, and I want to thank Standard Bank for their support in making those overviews possible. And it's just giving an honest opinion and try to get more information out there and helping producers to make more informed decisions ultimately.
So good luck with AMT and also with your work at the Northwest University. At the Northwest University, we are ready for you with all the questions and all the ways and means to answer those questions. Contact us. We're more than willing to help you register for that postgraduate degree that will help you become more. Thank you so much.